Now, as we move into our implementation stage, I think it's important to look at three things. First, from the Canadian dollar, US dollar perspective, we're getting to the point where I think we're kind of neutral in the very short term, though we do think over a little bit of a longer time, we're going to see the Canadian dollar appreciate. But given that risk aversion stage, we still see an opportunity pushing in the USD. But again, if we get a rebound back in the energy side, that should again favor the Canadian dollar as well. So that's why short term a bit more on the neutralish side, but I think longer term we do have a more of a +1 there on the CAD. Now, furthermore, I talked a little bit about our lens style and factor. Tied to that was our three real exposures that we had in a tactical allocation approach. One of that was the energy sector. Now we remain really bullish on the energy side, and again we'll likely buy on dips as well. So nothing has changed on the energy perspective. Again, supply demand is really driving why we think things are going to go higher rather than significantly lower from where we're at today. On the airline trade, some things have changed there. One, we are seeing that recession starting to pick up and consumer weakness. So even though we've seen some pickup in activity there on the travel side and better earnings coming out of the airlines, we think the risk after that surge may be on the downside again. And that has changed our thesis here, and we've pulled off and closed off that trade. The third one was a financial trade. Now, as much as we're probably looking to see what we should do here and maybe close it off, or again, as I talked earlier, maybe move into a covered call strategy, we're still a little bit hesitant because we think that financials should still outperform the broader S&P 500. However, we do think we're going to get closer to a bit more of an inverted yield curve, and that will be negative to the financial trade, and of course, a weakening consumer as well. So, I do think at some time we're going to look at potentially removing this trade as well, or restructuring it in a different way. One of the newer trades we've added in, is healthcare. Now, this is tied to the fact that we do expect to see healthcare do a lot better in a downward moving market, lower beta compared to something like technology as an example. And we do expect to see continued investment in the healthcare industry as well. And I think that's going to be a plus coming through, particularly given through what we've gone through in the past few years of COVID and other healthcare scares. I think this is an important part of where we're going to see reinvestment in, and why we're starting to actually increase our allocation here in the healthcare and initiate that coverage.